Good morning, everybody. Waiting for YouTube to load up. Good morning, everybody. We'll get started here in just a few minutes. Take time to go through and look things over. A lot of stuff coming out.
Asked me to work on a song. He come down to Key West, I can report it. Fishing, he's really busy here. Alan being the nice guy he is, live, rest of history, so. Alan is still fishing. So Mac and Alan are gonna fill in. Actually, their time. Somewhere, that's okay. It's in the summertime, all in September. Hey. Go to Washington. Thing to extend the summer in my book is okay. I'm gonna warm back up, that's all. Great. Boys traveling across the west.
Drive the day 7 hall, still gasoline and what you drink, yeah. Got a tattoo for the that's wife number 4. I'm a little long, screwing you all the songs on the stage. He could be another one cussing the government down, but he smiles. Got 100 reasons not to, but he's the poster child for happy. Happy done. Grab a 6th Street, find a rope swing, hang a pine tree in your truck, make a bid, just because. Still slow dance in a rainstorm and a kiss from your love. Yeah, happy it is, that's happy does. Some in the description, or Polaroid picture, a flip a coin, head you're going to Tucson, Arizona. But it damn sure ain't looking back on the stuff you never did. Sometimes you're gonna feel that life is better with happy. It's happy done. Grab a 6th Street, find a road swing, hang a palm tree in your truck, make a big, just because. Still slow dance in a rainstorm and a kiss of Louis. Laughing with a apple. What's happy here? What's happy does all the. You know, from the old herd, mountain diving bowl, every pickle jar, crinkle dollar, takes her another mile high. Happy is, that's happy does. Grab a 6th string, find a rope swing, hang a palm tree in your truck, make a big, just because. Still slow dance in a rainstorm and kiss so good you love. When it's on, it's got the sun. Was happy again, was happy then. It's happy then. All right. Let go.
There's our cue. Good morning, everybody. Going to be an interesting day for sure. Um, as we posted out, there's a lot of things later in the day. Well, first of all, let's jump right in. We did have the 8:30 a.m. unemployment rate, non-farm payrolls data. Market did react a little positive to that, pushing the indexes up. Now we do have the big drama here. Supreme Court tariffs decision, Fed president speaks, and then we have the 3:30 right before the market closes on the session today, the U.S. metals net position data. Okay, which there is supposed to be some deliveries. Hopefully deliveries go out. It'll be one of the first times in many, many, many years that a delivery fails. And there's a lot of drama, a lot of hype around that. So markets are going to have some pretty good volatility. Just watch the times, especially the 10 a.m. Time frame. Now, with these reports coming out and the drama behind it, um, there was an article. I just want to find it here. So let's see, an article that stood out to me that oh, they've taken it down. That's interesting. So what came out earlier is the Dow, S&P, Nasdaq are set to pause ahead of jobs report. Okay. Now that pause, I'm not sure if it's meaning to halt trading. Okay. There's a potential volatility. There's a lot of news, a lot of headlines out there. May even check with your broker to see if the day trade margin rate has changed during that time or around that. Okay. Now, if the exchanges and the brokers are adjusting margin rates for potential volatility, listen to it. Okay. Listen to it. There's a lot of potential news and volatility just outside of just the market news. There's a lot of political stuff going on, especially with riots and paid protesters and things like that, that are heating up the public. Okay, a lot of gaslighting. So take a look at the news. This is why we go through this. What's in the news? Okay, why do we look at the news? Well, we look to see what it makes you feel positive or negative. Okay, do you think the market's going to be bullish or bearish? And you bring that into the scope of things because he who controls the media does control public opinion, as we're seeing that unfold in all its glory there. Okay, so somehow things need to be switched up. Okay. Now, the reports that are coming out today are looking at a lot of volatility. Okay, we've got two Fed chairmen speaking later in the session. I think we got 10 a.m. We have another Fed, and we also have Fed president and Neil Kashkari, and also 1:35 and another Fed speaker. Okay, there's a lot of other things that are coming out. Okay, and the reason I'm pointing out a lot of this information is we also can see that with this news, and one of our things that we check each morning is the volume on the Dow 30 stocks. Okay. We monitor the volume on the Dow 30 stocks. You know, what's going across the ticker tape on CNN, CNBC, Bloomberg, things like that, are just the net change. Goldman Sachs up $6.42 on 5,963 shares traded. Okay. So it's not a lot of shares for that big of a price movement. Um, the volume is very light. So any news that comes out, okay, very light volume. This is a signal that the volatility is going to be really much greater. Okay. Now, volatility means stops, spreads, slippage. Okay, can all be added to a potential trade. Okay, so we have to understand the trading environment and what that might bring. Okay. Uh, and let's check. Natural gas was down near daily demand. Okay. So we're just waiting for a signal on natural gas to potentially move back to the upside, but there is a lot of news around energies. The other thing that I'll point out is that the Globex range, what's that? The Globex range on that gas is getting to the wide point, okay, where the bull trap and the bear trap are also places that we'll look for potential trade opportunities, okay? Remember, we take the Globex range and we compare it to the daily ATR, and when the Globex range is about 70+% of the daily ATR, we anticipate the first demand zone or first supply zone above or below the Globex range as a potential trade. So the alert, we're looking for that bear traps and price has gone down. And let's just double check going over here. I'm avoiding the indexes right at the moment because they, they've been shooting up pretty significantly. We got to go back several days here. Let's see if we can find some demand. Wow, way, way, way back. Now the news around the energies is we don't even have one, a demand down here on this contract. So we have to go out to a continuous contract. And we do have that gap area down there, okay? So I just looking across the board here, trying to find a demand zone on continuous contracts, something we can use for that bear trap. Now the indexes are going to get a lot of attention from novice traders. And those novice traders are not the brightest pennies in the box. Yeah, we just don't even have anything on the 60-minute chart. So instead of trying to find a demand zone, just understanding that once price breaks that Globex low, we'll look for the opportunity of a fair value gap for the potential reversal or turn back to the upside. Okay. Crude oil, as the pit opens, crude oil also is speculated to go down to $50 a barrel. I think that's what they're looking to do with the surplus of oil now being put out there, but it might take some time for that production to get to where price can come back down that low. Okay. I think the current administration is talking about $50 barrel oil. And that is kind of a wink, wink, nod, nod, is that $50 range is where they will start to build and add to their surplus. Okay. Building up inventories and so on. Okay. So the other thing I want to point out is just as the non-farm payrolls came out, we saw a very big spike on the 2-year yield, the, the 10-year yield, and the US dollar. Okay. Now, in a good trading environment, we want to see where we have the dollar and the 10 and the 2-year yield doing the same thing for the most part. Okay. When we have discrepancies between the 10 and the 2-year yield and the US dollar, the market conditions are a lot more choppy, a little more difficult for trading. Okay. The pre-market trend, $TRIN, which is a short-term traders index, is showing at 0.34. Okay. Markets are shooting up while the trend is low. That's a sign of a squeeze to the upside. And it's also a sign that there are sellers there's more sellers, downticks and down volume, than upticks and up volume when the markets are shooting up. Okay, so whomever is selling into this up move. We saw a lot of volatility on heating oil, and it looks like heating oil is continuing to move up as well. Heating oil is often a good odds enhancer, a lead indication of what crude oil is going to do, just by a few minutes. Okay, so we rely on heating oil, the direction, the trend, whether it comes into a zone or a fair value gap area. We want to pay attention to heating oil for the opportunity to, and basically an odds enhancer to help us make a decision if we're going to trade crude oil. The other thing about crude oil is this is about the fifth or sixth time that price has tested the 50-day moving average. Okay. So price closing back above the 50 moving average is going to be pretty bullish on the daily chart. And may have some more upside, possibly up. Look at the target around the 200 simple moving average. Okay. The VIX, the volatility index, let's see, has dropped. It was trading up a little bit higher, around 26, 27 cents in the pre-market. It's still in the pre-market, but has since dropped. Okay. So getting back down to that extreme complacency area, we want to watch what the indexes are doing at this point. And once we get into that extreme complacency, the trend is low. Well, sorry, the VIX is low. I mean, markets are getting up at the high point. Okay. Now, throughout all of this, you're having the trend low, time to go, and the VIX low, extreme complacency. As markets are ascending, there's a lot of selling going into that up move. Okay. Around the market open, closer to it in about 15 minutes, at market open, we want to see if there's any buy program or sell program on the tick Q or the tick. Okay. This will give us an indication of whether there's buyers or sellers on the composite New York Stock Exchange for the tick and for the tick Q for the NASDAQ composite. Okay. Not just an index, but the whole composite. And we look to see if there's more upticks and up volume or downticks and down volume, signaling extreme areas since they pretty much stay in a range. We see if there's buyers coming in, okay, or sellers coming in for that. Okay, this brings us out to the equity indexes, okay. Equity indexes are already going to be pretty volatile. We talked about the volume, okay. Still very, very light volume. NVIDIA is a good odds enhancer to watch as far as the number of shares being traded in the pre-market. Okay, they have a lot, so there's a lot of program trading going on in there. Okay, let's see what else. Yeah, we have several of these stocks that are trading up, but they're on very light volume. Light volume, we look for potential more volatility. Okay, because price is going to, in the algorithms, are going to seek where the buyers and where the sellers are. So when those announcements come out, okay, and the announcements I'm referring to around 10 a.m. Supreme Court rules on the tariff decision. Now, this is going to create some big price swings, and all that's going to be happening on that is the algorithms are going to be looking for the largest stack of buy orders or largest stack of sell orders in order to process and keep the market open. Okay. And we also seen that the potential of a pause. Okay. And I'm not sure the terminology on pause, whether that's just people waiting on the sidelines for it, or whether that's going to be like a limit move or a lock limit, just shutting down the market while that news comes out. Okay. So be prepared for anything. And as we start to evaluate all these things. Okay. Now, big volatility is going to attract a lot of attention from novice traders jumping into the trend. A lot of people get hurt with this volatility. We want to look for where those extreme moves are, collect information on the chart as to where the all-time highs are for the S&P, uh, and and the other indexes. As we know that futures follow the cash market being the exchange traded funds is a good measurement of that. You can see that IWM is gapping up above the all-time high. Okay. Diamonds also 493. We're not quite there yet. Okay. But gapping up. Qs gapping up 2.25. The NASDAQ has in the Qs, excuse me, have potentially the biggest move ahead of them. Okay. The SPY, the Diamond, and the Russell have made new all-time highs. Okay, the Qs have not. Okay, so there might be some little catching up on that. Okay. With that pending volatility, you know, don't fight it, don't debate it. Okay. Look for your choice of entries. Okay. Now, as we look for choice of entries, if you're using a leg-based group of candles, often those are associated with a reversal, a new trend. Okay. If you're using fair value gaps to enter, you're already in a trend. Okay. And usually with the fair value gaps, you're taking on some additional risk. So if you choose to trade this environment, you can do really well with just one micro and manage your stop loss. Okay. We are expecting some big swings. So we just seen that the S&P popped right up into this fair value gap area. So that one's off the table. Might have another little reaction around that 7,000 mark. Okay. The even the small time frames here, looking at the evidence on the chart, notice this is the overnight session. We had the Asian and London session. More of the London session has done the manipulation portion of this. So accumulation, manipulation, distribution. Okay, so some of the things that are leaning on this market is that the reaction to the news or the event may be more towards the downside in looking at chart patterns, small time frame, of course. Okay, accumulation for the Asian session, manipulation for the London session. We might be looking for that distribution in the New York session. Okay, so very clear evidence that it does look like the markets want to move lower. We just got to see if this spring reversal is if we're right at the start of that now. Cash market right now, futures, S&P futures trading up $12.50. Even though we have light volume, we have 3 Dow stocks that are negative over 94 cents, and we have 10 that are positive. Okay, so that leaves net results is 7 positive. 7 times 2 would be 14. Cash equals positive 14. Futures are trading at, let's say, positive 12. So we're cash and futures are somewhat and very close to being balanced right now. They're not oversold, they're not overbought. Having a good range of whether futures are overbought going into supply or oversold going into demand can help you with some of your trade decisions. Okay. Now I'm going to look and I'm going to keep my contract size very small today, and we'll just stick with the 1 or 2 micros for all of this drama to come into play. Okay. So I'm going to set up the first trade here off the 5-minute chart on the S&P. We do have a fair value gap that's set up in about 20 seconds, or it'll be complete. We'll look for that entry about 69.81-ish. Okay. So 69.81. Still with 2 micros. Okay. my stop loss is going to be right back up there at 69.90. Okay. So with a fair value gap, we're catching a trend in the little pullbacks to the fair value area. Okay. So that's where I'm going to look for that first opportunity. See if it pops back up there. Okay, let's bring over, and that trade is live. Okay, so just to clarify, my stop loss is right up at the high, and it is a sizable stop loss. Okay, on the chart, it looks pretty big. So we don't have to take the usual number of contract size. Okay, you can size your position very small when you have a wider risk or stop loss. Okay, now if this plays out where we get our entry, the profit target is going to be below this accumulation area. Okay. And we can see that as we go back over to the left-hand side of the chart, that there's a lot of area that's already been used up. Okay. So an entry around 69.81, looking for a fresh area. We'll look at target one at 69.41. It's already been tested. Okay, get a bounce there, and then we have a fresh level down below. Okay, so that reaction that we're looking for and profit target would be target one right around this area, and target two. So even with a couple of micros, these are some pretty sizable moves, some reactions that the market may have looking for buyers and or sellers. Okay. The clue and the reason for the short and not looking for the long is how did the Asian and London session play out? These are clues to help us understand how the New York session will play out. The term for this, and if you go out and look on the internet and the web, it'd be accumulation, distribution, accumulation, manipulation, distribution, or referencing AMD. Okay. So do your own research, search it out there. Um, and I think you'll like it. I mean, it's been very, very reliable. Okay. And we got about 2 minutes left for this fair value gap. Now, some of the clear evidence when you're using fair value gaps is documenting when two of them are close together. Okay. It's usually a pretty significant sign. Another thing for using fair value gap is the steepness of the slope and the reversal. And once this one completes, we can have a small trade here. But again, you're using the pivot high as your stop loss. If you're looking for more of a position, you're going to wait for price to come back up to the first one. Okay. If you want to be aggressive, maybe just use one micro right around that 69.74. Okay. Again, properly sizing your position based on the risk of your trade plan. Okay. And use only half of that risk when you initiate the trade. We've got a lot of room for profit potential because of the consolidation. Okay. So we got about a minute for that one to complete, and we'll come back to this in just a moment. Okay. Now, we have seen that some of the indexes have made new all-time highs again. This is not an easy place to be bearish or start to pick tops on the major markets. Okay. Look at that. Nice pullback into that. I'm going to try this with one micro, getting the move back up, a little larger time frame.
Order filled.
Okay. My stop loss is going to be down there at 25,663. Now, your risk parameters might be a lot more than what I'm willing to risk. Okay. Everybody has their own trading plan. Okay. A good example of this is I would be willing to risk about $300 per trading idea. But the initial start, I'm only willing to risk half of that as I get into the trade. Okay. Now we had a fair value gap on this 20-minute chart of the NASDAQ. Okay. Prices dipped into it, and I'm using the prior area as my protector, or the start of that move as my stop loss. On the chart, it looks pretty big, okay, as far as the stop loss. But sizing your position properly, you can stay within your trade plan parameters, okay? Okay, and we've got that one underway. And let's come out, let's look at the 5-minute chart. As price bounce back up on the 5-minute chart, we'll look at a profit target right about that 25,773. So your initial entry into a trade should not impact how your trade day is going to go. Okay. You can keep it at a small amount so it doesn't ruin your day if you get stopped out. Okay. Let's see. We do have a leg base, a little bit lower, 5-minute chart. The NASDAQ did also in the Asian session was quiet. London session showed the manipulation. And now we're looking for that distribution or potentially a double top, okay, to be formed. NASDAQ daily chart trading above the 25 or above the 50-day moving average, okay. NASDAQ also, when you step over and look at all the large market cap weighted stocks, okay. Let's see, Dow prices are way different. Um, you might be using a contract specific chart or a continuous chart. You double check those. Let's see. On my Dow chart, we have the Dow futures trading at 49,517. Okay. Let's see, we got the NASDAQ all set up. Also looking at potentially in a demand zone. And we're looking at an opportunity for the fair value gap entry to sell short. We'll use the opposing zone as our profit target since we're already long. And then we'll look to flip that around as price comes back into that range. Okay. So let's bring up the Dow. Oh, I'm sorry, the Dow stocks. Okay, let's come over to that. Depending on what you subscribe to, okay, in real-time data or delayed data. Sometimes as futures traders, we don't pay for the extra the stock data. Okay, I have real-time data going on here. Maybe that is another idea around that. Okay. Yeah, I'm showing 1, 2, 3, 4 Dow stocks negative over 94 cents. Okay. And now I'm showing 5 that are positive over 94 cents. Okay. So the net results would be well, it's changing pretty rapidly because of the volume again. All right. Let's see where we're at here. I'm gonna stop the video because it's slowing down my chart. I want another shot at that. I'm gonna buy one more micro here. Yeah, look how price is moving. This is very volatile. We're also coming into a leg base. And my charts are freezing up. Give a second to complete. Come on, charts. Keep up. All right, hold on 1 second. I'm gonna stop sharing for just a couple seconds here. Let my charts catch up. And they're not catching up fast enough. The price came right into that leg base. Did get stopped out on the first one here. We're planning for the distribution as we were looking at earlier. Well, I'm really struggling on the charts updating. There we go, coming back up. Let's come back to S&P. Sorry for the data delay. It's got a lot of things running at the same time, but there's also during these high volatile times, some platforms do run a little slower. Okay, so looking at the Dow 30 again, just kind of referencing because we see the volumes coming in, but extremely light volumes still. A lot of folks on the sidelines. Accumulation, manipulation, we're looking for distribution. Okay. So we're still looking for downside price move. We just have to find a place to step into that. Okay. We have 1, 2, 3, 4 Dow stocks negative over 94 cents at the moment. And they're changing so fast right now. And looks like 11 up. 7 times 2, 14. So cash and futures are still somewhat on the balanced side. All right, let's proceed over. See what crude oil. Big spike up. Breakout on the 60-minute chart. Nat gas. Doing a whole lot of nothing. And gold just came up to a first resistance level on the daily chart. Third time it's been up in this area here. And there's really nothing in the way once it breaks above that 45.12 area. All right. Price broke through that one. We currently have an order still set 69.81 and our stop loss in place up above. All right, Dow, back to Dow. Look at that big whipsaw conditions here. Russell, new all-time high. Internals, we had a buy program at the top. While the trend was low and the VIX down, this is what you might anticipate as a short squeeze at this point. In using the trend and the VIX, you always remember the phrase, if the VIX is low, it's time to go. Trend is low, time to go. Okay. When the markets are shooting up and the VIX is low and the trend is low, okay, it often is conditions of trading, whereas we see a squeeze on the shorts. Okay. Now we see that there's a lot more upticks. Now, are these upticks based off of short covering, or are they based off of, oh, I see, Kenneth. Yeah, that could be it too. Thanks, I'll remember that too. Kenneth's quote, he was seeing some discrepancies in the pre-market or in the Dow 30 stocks not correlating with what he had. Okay, so he had to check the extended hours, and what I was showing was the pre-market. Okay, we just got hit on the S&P. Our stop loss is in place. Very volatile. And based on the chart patterns here, the accumulation, manipulation, okay, the manipulation phase is pretty tricky, okay? Um, we're looking for the distribution side of this. But again, extremely volatile based on a very light volume, okay? Got $90 risk on the S&P with my stop loss in place. And I'm also noticing that my stop loss is right where I have another fair value gap. Okay. I'm half tempted to move it up a couple of points. But we'll see how it plays out here. And just a word to the wise, that most of the time, or historically, when the presidents come out, any president, this is not party specific, okay, comes out and says it's a good time to buy stocks, it's usually a pretty good time to buy stocks. Okay, so strongly advise not to go against what the president has intended. Okay, and it's not just because of the one we have in office right now. It's anyone. When you go back in history and you look at all of them, both parties, they all tell you with a wink, wink and a nod, nod, what to look for. Okay, when to buy, when to sell. All right, so we're seeing that wheat is coming back down into demand area between 512, 509. Crude oil shooting up towards that 59, 64 to 6012 area. Okay, so we'll keep an eye on that one. A lot of whipsaw with the FX markets. The other one to keep an eye on for lead indication, the 5, 10, 30-year bonds and notes. On the larger time frame, since the beginning of December, they have gone sideways. Okay, an accumulation. Depending on the move out of this, the breakout phase will then set us up for what the next trend is potentially to be setting up. Okay. All right, how are we doing on the S&P? Still not green, but we found some sellers there. NASDAQ. Bummer, I got stopped on that one. Yeah, I think we're going to see a lot of volatility. Russell new high and still going, but look over at the volume. The volume is very, very light. And let's see, let's come back over here. And I'm looking for a trade opportunity. The only thing that we're in right now is a gold position that I was in a while back, and we have the micro Bitcoin. That's what I was looking at. Bitcoin, looking for price movement up, a little bit larger time frame. Currently taking some heat on that one. Silver pushing higher. Okay. Russell just keeps going higher and higher with lighter and lighter volume. And we're about 15, 16 minutes away from the Supreme Court decision. Remember, they've already taken a vote. They already know what the decision is, and they've already made the White House available to that information. Oh, here we go. Okay. Hassett says we have tools if we don't win a Supreme Court. Okay, big announcement, big comprehensive housing plan. White House advisor, where I should be. There's a lot of stuff coming out. A lot of information with the US dollar. Oh yeah, that's coming out today too. I forgot to mention that. The dollar and the yen. Okay, the yen carry trade is coming to an end, and that's going to have a big impact as well. I think we had a chart on that one here. Yeah, a lot of volatility on the yen. So many major things coming out today. This
Order filled.
stopped out on the Bitcoin. S&P is coming for us. Now we just have two micros, and we're still sitting at potentially a $90 risk on the trade. Okay, so it's still within my trade plan. We'll just keep a close eye on how that decision from the Supreme Court's going to go about tariffs. Now, don't try to trade that. I mean, I'm going to stay in here and keep my $90 risk. So that's kind of my gamble for today. At $90 risk on a couple of micros. Based on the price pattern here, we are looking and potentially looking at that distribution. Okay, we still are on very, very light volume ahead of these announcements. Well, Amazon's got a lot of shares traded on it. Let's see what we got going on the NQ. 5 minute. Oh, wow. Played right off of that fair value gap. Beautiful. The challenge of doing these classes here is that sometimes I'm all over the place, looking at different trade opportunities. Okay. And I miss a couple of them. Dow. Yeah, that's not, look at all that whipsaw. That's huge amounts of whipsaw. 49,670, 200-point swings. Mm. That would be a great entry to go long if you catch it down there. Big reaction in the market. Okay, Russell got a new high. Still looking for distribution on the Russell as well. All right, we're still about not 8 minutes, not 7 minutes away from the economic report. Now, all I'm doing is just getting myself set up for this. There will be a lot of slippage. And I'm just going to stay with the S&P, the couple of micros. Now, once the, oops, sorry, I see the chat there. Oh, good morning. So, once we see the reaction, okay, if price drops, it's looking for buyers. If price rallies, it's looking for sellers. Now, who is the it? Well, the it is the order flow. Okay. They're trying to keep a market orderly. And when there's a lack of buyers or sellers, okay, the market's going to drop to find the buyers or rally to find the sellers. Okay. That's what the equity indexes. Okay. The futures are pretty volatile that way. Okay. It takes approximately 10 to 15 minutes around that time. That's kind of an average. Okay. For the stocks to catch up. Now, that turnaround time for the stocks to catch up to what the futures are doing may be faster due to the lighter volume. Okay. So it's kind of a play on things. Okay. We're expecting a reaction in the price. If the markets are going to go up, they probably will drop first. Okay. Giving the stocks a chance and see it to giving the market players for price to drop to find those large stack of buy orders. Now, when you're dealing with this kind of market volatility or potential volatility, a dealing with this potential volatility, um, you got to give it just a few more minutes to play out. Okay. So I'm just going to stick with the trade we're in. I'm going to leave my stop loss in place. We still have $90 risk. The other thing is when you study market behavior, what is the normal percentage price drops? Okay. And I would be guessing if we're going to, it would be about 1.5, possibly 2%. Okay. So from the high, where would that buy point be? Okay. And from the low of the session, where would the selling point be? This is a lot of data to collect, but over long periods of time, while you're learning, watching market conditions, these are things that should be in your trading journal. Okay. When we see a market extreme, when the S&P gets down about 2.5 to 2.75%, we often see a sizable bounce. Not necessarily a trend change if it's really underway. Okay. But we see a sizable bounce. Okay. So what is that on the Dow? What is it on the Nasdaq? What is it on the Russell? Now, I could give you those numbers, but they wouldn't mean anything to you till you start documenting it. And I just gave you the one on the S&P. Okay. So with the report coming out about the Supreme Court ruling, I would anticipate that about a 1.5% price move. So let's look at that from the high of the session. And let's see, let's get the labels on there. We got points, percent, swing. So 1.5%. There we go. Okay. Sometimes the reality is like, oh my gosh. Okay. So down around this level is where I would be looking to be taken along if price dropped. If we get that 1.5% move up, yeah, it's going to be quite substantial. Okay. So we look and monitor those percent moves, reactions off a news event. Okay. And I don't want you to jump in just because I'm showing you an area down here. This is where we're going to look to go long. Okay. Right down in this range, about 68.82 to 68.74. Okay. It may take out several demand zones, several areas which we might have used for a trade opportunity. But in recognizing when news events like this happen and a percentage move, hey, this is going to be a pretty great trade right there. Okay. Now, why are percentages and price moves very important? Well, when we have limit moves, lock limit moves, and things like that on the indexes and on other commodity related products, okay, um, oh, I do, Ken. It's our pre-market routine. That's what I use. The question is, do you have a recommendation for a good trading journal? Well, doing the pre-market routine each day, and that's what I do in the, as you see, our pre-market prep. All there are these things that I watch and monitor every single session, and they help us understand the trading environment. So thanks for the question. At any rate, when we start documenting what is that percent move for an extreme move, and we're looking at 100 points on the S&P, okay? If we're waiting for that down here, we're not going to try to jump in ahead of time, okay? The more that you see this happen, okay? Trump has a plan for backup, had a backup plan for tariffs. Okay. Yeah, That's a key point there. So whatever the reaction is, whether it's negative or positive, okay, if there is a restriction on the tariffs collected, okay, we're going to see a massive drop, okay? Because speculation is all that money has to go back out, but price going to drop down and find the buyers. And we're still going to be watching about that one and yeah, 1.5% move. Okay. Now, not advocating getting in right now because we don't have another setup other than the one we're in. Okay, 5 minutes away from that, the volume is still pretty light. And if you're listening to what I'm talking about, okay, and implying is that it's going to take, if the market starts falling like this, nobody's going to be looking for the news of what the backup plan is. But the big banks and institutions are just waiting for these prices. Okay. Now, on the other hand, price could just shoot straight to the stratosphere. Okay. Which one are you going to take a chance on? Is anybody in this right now? It will happen fast. Kind of your hold your breath trade here. It'll be a nice ride back up, though. You don't have to get in front of it. You're not going to miss anything. Just wait for them to come back and find the buyers, but not within the first 10 minutes of the news being released, because stocks will need time to catch up. Any questions? We've got a couple minutes while we're waiting. Yeah, that was a nice entry. But based on where we started things off, we had the accumulation during the Asian part of the London session, the manipulation, the New York session, we're looking for distribution. I expect some of the smaller time frame demand zones price to run through it. And that's greatly because of a lack of volume. So tempting to want to take a shot at it, isn't it? There will be some slippage. You're already starting to see that between the bid and the ask, sometimes it's a little more than a couple of ticks. Oh, and I don't know if anybody follows the poly markets, but they're anticipating that there's a very low chance of the Supreme Court ruling in favor. So that's adding to kind of the bubble. I went out to try to trade those poly markets, but they don't allow US people to trade them, even with a VPN. All right, drama's coming up here. It's going to be big. Oh, let's see. We got that's that's cash carry. That's nothing. We want to see the actual Fed announcement. Consumer sentiment came out. They came out with as expected. What's the lottery play? Is it going to be down or up? Maybe we'll catch both ways. Poly markets? Yeah, something to check out. Becoming pretty popular. It's kind of a betting system. And who will Trump nominate as chair? And you can see the pots are getting pretty big. So it's almost like a casino here. This is why it's not allowed to be in the open market or in the US. Strike. There we go. 35% chance. If you want to make a bet on that, you get a 1 to 10 ratio, but it's unavailable. All right, let's go back to the news wires. Okay, starting to break out here. U.S. Supreme Court, their finishes opinion release for Friday. It doesn't tell us what it was. Oh my gosh, check this out. Will not rule in the Trump tariff case today. Unbelievable. All that buildup, all that drama, and they let the air out. Unbelievable. All right, so that's going to be a big disappointment. Oh my gosh, nobody knows what to do now. All right, let's get back to our charts and let's start setting things up. I do think the distribution is going to be the play. I'm willing to add on to this position now. With that, I'm going to add 2 more micros to my short position.
Order filled.
Got 4. I'm adjusting my stop loss. Let's see, we had it right there. Don't need that anymore. I'm going to adjust my stop loss down a little bit here to 69.85. Okay, adding on the 2 micros here, I now have risk of $132. And we'll look for the target 1 and target 2 respectively back down at where we could anticipate demand and supply. Okay. So we added on to position and we adjusted our stop loss. That's crazy. They couldn't have come out and told us that earlier than the actual time. Unbelievable. The drama continues. Now, when you have these accumulation areas in the overnight session, the Asian London session, then you have that manipulation. The target you should always be looking for be on the other side of the accumulation area. Yeah. All those trades on, yeah, I'm gonna step out of gold. Even though things could go higher.
Order filled.
What else do we have? We just have S&P. Okay. Okay, price should accelerate in here. All the orders have been filled. Incredible. All right, we have, let's see, we have a little support here. Now we're going to look to add on to this position as we create additional fair value gap areas. We're still looking much lower. And we do have a potential breakout. Breakout trades into that accumulation can be pretty good. You still in it, Silk? Doing good? Looking for that target 169.41. Anybody still in the trade? Cool. Yeah, that's one part about our live trading sessions is that we do have this as a subscription service, but it's really nice when you can get into a trade with the instructor and cover that cost. And that's always helpful. Maybe it pay for the whole year. Pocketed 200. Nice job, Callie. We got about 2 minutes. Looks like we got a nice candle there. We may have another fair value gap area. And we'll get our lines ready. We'll wait for that. We might have another one starting to form right here. Boy, that's incredible. Everybody was waiting for that too. Now, even the big players were waiting for that. Look at that. Sherwin-Williams and Caterpillar up $5 each on 300,000 shares traded. Still very light volume, very much big volatility. There we go. There we go. Nice, nice, nice. Remember, we're looking for 69.41. There's going to be some bounces. We have a support area. The price is approaching. 3 out of 4 times, price is going to bounce off of support. 78% of the time, you would anticipate that. So if you're prepared for the bounce, you just kind of change your stance a little bit. You don't panic out. Let's go out to the larger time frame. Yeah, we still got a ways to go. We have that unfilled opening gap right about 6,900. Woo, Russell. Dang. That was a brutal drop. Dow. Dow as well. The Dow's just now building a fair value gap area. Excellent. 10 seconds left. Stop loss would be 49,622. Entry will be about that 49,475.
Order.
Where I wanted
Order filled.
75. And stop loss 620. Okay. And we don't have a fair value gap yet. Need this candle to close. We still got 4 minutes left in that. Okay, we did set up the trade for the Dow. Taking a trade short, 49,474. Waiting for that candle. See, 78% of the time when price hits a support or resistance, we'll get a bounce. So all those folks are panicking out of their trade because they had a nice little profit, which is okay. Okay, you take the money when it feels good. Okay. There is another opportunity to splice into that at the breakout. Breakout trade, 69.56. And we still got about 3 minutes for this candle to complete. Whoa, candlestick. About 1,200 bucks. Nice job. Do a little happy dance on that one.
Order filled.
Yeah, I think we just got our Dow. We just got filled on our Dow. Okay, now one of the things about trade management, okay, was we're in the trade now. We got our stop loss in place. Okay, and I got 2 micros on this. Now I'm going to go look at the dollar amount. Okay, you have that real conversation. Okay, so if I go back up and find where my stop is at, I have $145 risk on a trade with my stop loss up here. If that is outside your trading plan, you can always get rid of one and make it 70, okay, or 75 or whatever, okay? So this is the time to make that decision. Once you realize that you're risking that dollar amount on this trade idea, okay, is it still within your trade plan? Many times we pick levels on the price chart and we say, I'm going to get into this trade. And then once the price starts going against us, we start to jump out or we take a much bigger position than we should. Okay. A lot of volatility around this. All right, let's come back over here. Looks like our data is, whoa, look at that bounce. No fair value gap in there. Yep, finding where the buyers were down right in all this mess of yesterday. Okay, let's come out to NQ. Down. Okay, we got the Russell. Okay, Russell. Now, we do have our Mastering the Charts recap and review where we're going to be going over some of our trades that we've taken over the last week or so. And we'll continue with kind of doing some live trading interaction during that time. That starts in about an hour after our live trading room session. So if I were looking, I'm going to keep where I'm at right now, but using the fair value gap here, we're seeing that the fair value gap was created. The entry for the Russell would be about 26.25. and your stop loss. Right at the top up here, about 26.42. Always size your position based off of your trading plan. So much volatility. All right, let's see how the indexes are regrouping, and let's see how the stocks are responding to that. Microsoft, Google. Imagine what those option traders are going through right now. They're probably their head spinning. So why did the Supreme Court delay? Guess it didn't want the responsibility of making the markets move. What are they gonna do? Come out over the weekend and say something? Maybe they got an influx of politicians that they have to deal with. You can see that the stocks are kind of confused by this as well. All right, got gold. That gas continuing to go lower. How did the internals take it? Well, the VIX is only kind of unchanged. We're back in the no trade zone. I think the market's just kind of spinning its head now. All right, so back to crude oil and heating oil. Crude oil is above the 50 moving average. That's positive, might be even more bullish. Price going back below and closing below the 50 is going to be looking at another potential down move. Let's see how that plays out. Let's see. Japanese yen falling out. And about ready to jump back into micro Bitcoin. But there's no clear picture. Going down in time frame, up in time frame, trying to find a way to get into that. Ooh, NASDAQ's back up there. Small risk on this one.
Order filled.
Just using 1 micro. Stop loss gonna be 791. And we'll come in on the Russell as it comes back out of that at 625, sell short. Keeping my position small. Wow, what a big whipsaw.
Order filled.
Yep, we just got stopped on the S&P. NASDAQ. Huge whipsaws. Oh, of course I got out of gold. That was chicken, huh? That gas. No entry, crude oil. Well, it certainly made an interesting Friday for sure, but wow, Supreme Court took our fun away for sure. As we get a little closer to the end of our trading session, we will be doing Mastering the Charts recap and review. This is where we have everybody has open mics. If you want to talk, if you have some questions, this is where we take the time to go over what we teach in Mastering the Charts Part 1. Okay. And looking for the price patterns and potential trade opportunities and such. Okay. We also do a review of the trades we have taken over the last week or so, the last few live trading room sessions. And again, it is open to everyone being able to chat, talk, you share their screens so we can get a better picture of what you're looking at. And it's a good place to come and get the review. Yeah, S&P bouncing back up is
Order filled.
creating some fair value gaps. We do have another fair value gap up above at that 7,000 mark on the S&P. And it looks like we've gotten stopped out of most of those. Russell now going back up. Let's come over to our exchange traded funds, see what their volatility was doing. Okay, with the exchange traded funds, we did see IWM make a new high today. Looks like the diamonds is moving towards that all-time high. We got the Qs has the furthest way to go. SPY is also making an attempt, so spiders and diamonds. Let's check our internals. That fear or that complacency is coming in. The trend is still on the low side. We have an equal number of advancing over declining issues, and we are seeing that on the tick queue that there's some buying coming in. And we're seeing the upticks on the New York Stock Exchange as well. Okay. Now, my assumption, and my assumption only, is that there was a lot of folks anticipating the short, just as we were. Okay. So this move up that we're seeing is much of a squeeze, a short squeeze. Okay. And the short squeeze, when we have light volume, can be pretty volatile. Okay. So let's take a look at the cash market. Right now on the cash market, we have 11 Dow stocks positive, and we have 1, 2, 3, 4, 5, 6, 7 negative. So net results was 4 positive. And you take that and multiply that 4 positive by 2, and that'll give you positive 8. And what that does is represent a value of cash. Cash equals 8. S&P futures are trading at 34, 33. S&P futures are overbought relative to cash. Okay. Now, that is only a statement. It is not a trade. Okay. But when you approach a trade with that information, futures overbought relative to cash, you're looking for price to intersect with a supply zone for the trade opportunity. A supply zone can be consistent of the leg base group of candles. It can be a fair value gap. And with each of those, you have places to mark your entry, potential entry, and your potential risk on the trade. That will help you size the position accordingly to fit your trading plan. Okay. So I think that's what we're seeing because as you start looking at some of the the matrix or depth of market, you see it's very, very light volume as price keeps moving up here. So that just tells me it's shorts being squeezed out of it. Another piece of evidence about potential short squeeze would be where the trend and the VIX are trading at. Okay. And as the NASDAQ getting up to that extreme level of upticks over downticks, okay, we'll see how price holds that level. Maybe trend keeps moving up higher, or we start to see a quick reversal. Generally, when it gets up to this range, we start to see that little bit of a pullback. Maybe it's just a pullback to find demand. Okay. But find your entries, manage your risk. Wow. At least we were well aware of the volatility. And some of you made a nice little profit. Myself, I gave back what I had, but day's not over, it's just starting. Okay, well, I'm going to move on from here. We get prepped and ready for our Mastering the Charts recap and review. Look forward to seeing everybody over there. And if you have any questions or comments, just reach out to the team or reach out to myself, and we'll be glad to take care of those. Okay? So I wish everybody a happy Friday. I'll see you over in Mastering the Charts recap and review in about 1 hour's time. And be safe today. Keep that contract size small because you're already seeing that the volatility is just pretty wacky. Okay. Oh, well, you did better than I did. I took that $150 loss. So, but we'll get it back here towards in the Mastering the Charts review and recap session. All right. Everybody have a great Friday. We'll see you then.